Hi, Des O'Neill here. Today I want to talk to you about FRS 105 and the opportunity to simplify the accounts and financial statements of smaller, or in more particular, micro entities. I also want to clear up some of the confusion around FRS 105 financial statements and banks and the CRO accepting abridged FRS 105 accounts. For many firms, 31st of December 2017 year ends are the first ones that accountants are really considering applying FRS 105, and I want to give you both the overview and the details of what you need to know. Now, this is the second video in our free three-part training series, and in the first one I looked at Section 1A of FRS 102. The option to apply Section 1A of FRS 102 and FRS 105 for micro entities both came into play on the 9th of June 2017 when the Companies Accounting Act 2017 was enacted. Now, it was only 2 years late coming, but I suppose it did eventually arrive. So first of all, if you've not seen the first of this three-part training series that I did last week on Section 1A, if you just click on the video here beside me, you can access that part of the free workshop. So in that video I looked at Section 1A of FRS 102 and the key differences between Section 1A FRS 102 accounts under Companies Accounting Act 2017 and full FRS 102. Now, I've also included in that video two valuable downloads for you, your Section 1A quick guide and a Section 1A sample set of financial statements, which is fully annotated and color-coded to reflect the differences and changes. So for the downloads alone, it's worth taking a look at that video. Thank you very much to everyone who has already watched the video and has been in touch with comments and queries. So in this second part here, we're looking at FRS 105. The first part was about FRS 102, and the entire workshop is about helping you ensure that you're on track and stay on track during these challenging times from a financial reporting perspective. Like, the changes that accountants in Ireland have gone through in the last 2 years have been horrendous. And it all could have been so easily avoided. There was only two things that needed to be done to avoid all the hassle that we had. Step one, all that needed to happen in relation to the commencement of Companies Act 14 was put in a 12-month optional adoption period, which would allow Companies Act 2014 overlap with the commencement of FRS 102. Step two, all they had to do was implement the EU Accounting Directive 2013-34 in accordance with the timeline set out by the EU back in July 2015. So if they had wrapped that into the Companies Act 2014 and just slowed down the compulsory implementation of Companies Act 2014, two simple steps, that would have resulted in just one change in the accounting regime in Ireland, instead of having three different changes over a 2-year period. Companies Act 14, FRS 102, we're not allowed to use Section 1A of FRS 102 or FRS 105. In comes Companies Act 17, then Section 1A and FRS 105. Ridiculous. Like, the voice of the accountancy profession is just not being heard, particularly the voice of SME accountants, the ones that we work with up and down the country every day. You see, when the Big Four has something to say, every politician and civil servant in the country will hear about it. But the medium and small practices on the front line can't be heard. Okay, I need to answer some of the questions that we've been asked since our video on Friday about Section 1A of FRS 102 and Companies Act 2017 and the new IASA auditing standards. Now, there appears to be a bit of confusion here in relation to the changes and when everything kicks off. So let's go on screen here and I will hopefully dispel some of the confusion that exists. So what we have is, we have Companies Accounting Act 2017, and that commenced on the 9th of June 2017. Now, there was compulsory adoption and there was voluntary early adoption on this piece of legislation. So the early adoption, basically any set of financial statements signed off after the 9th of June 2017 could voluntarily adopt certain sections of Companies Accounting Act 2017, and in doing so, if we signed off financial statements after that date, we could potentially apply Section 1A of FRS 102 and FRS 105. So they were voluntary. Everything here at that time was voluntary. Then what we had was, we had the new IASA auditing standards. Now, the new IASA auditing standards, they became compulsory for all audits for the years ending 30th of June 2017 onwards. No choice. So this Companies Act came in, but you had no choice here. Everything after 30th of June 2017 had to be signed off. Now, if you chose to adopt Companies Accounting Act 17, that would be incorporated, but you would have had 30th of June 2017 audits using the new Irish auditing standards and using the old provisions under Companies Act 14. Then we moved on, okay? So what we have then is, we have the compulsory adoption of Companies Act 17. For all periods commencing on or after the 1st of January 2017, logically our 31st of December 17 year ends, they must adopt Companies Accounting Act 2017. They have no choice. So here we are in February 2018, you're doing 31st December 17 accounts, they must be produced under Companies Act 2017. And our friends, Section 1A of FRS 102, and FRS 105, they remain optional. They're an option. We have no option here. We must adopt this for those periods, but the accounting regime remains optional. You have a choice to adopt or not. So that was the big question that was coming out of our first video in the workshop. And you see, sometimes this stuff is messy and it gets complicated. And that's what OmniPro specialise in. That's what we do. You see, we believe that being an accountant should be a profitable and rewarding experience. So we support accountants technically and strategically to ensure that you meet your regulatory compliance requirements in the most efficient and profitable manner possible. For the last 15 years, we have worked with thousands of accountants in hundreds of firms. Huge percentage of accountancy firms in the country are clients of ours for one of our products or services. You see, we believe that accountants are uniquely placed to shape the business world. Accountants creating outstanding businesses for themselves and outstanding businesses for their clients too. And all this technical stuff and FRS 102 and auditing standards, that's not what's truly important here. Yeah, it's important that you get it right, but it's not what's truly important. And we want to work with you to ensure that you're fully equipped for the task, balancing peace of mind with efficiency and profitability. And you see, what's happened here is, I talked about the mess that was made in terms of the implementation. Two things could have made this so much easier. But we're not just changing one accounting standard here. What we've done in the last 2 years is we've changed an entire regime all at once. Company law twice, FRS 102, now Section 1A of FRS 102, then FRS 105. On the surface, this is the single biggest change to the financial reporting regime in the history of the profession. But is it? And you see, we have, as only Ireland can do, made a total hames of it for the accountancy profession and made it much harder than it needs to be. Okay, for the next few minutes, I want to work with you going through the main differences that you need to get to grip with now in order to unlock the potential and opportunity of FRS 105. So, I'd love to tell you here that there are opportunities in the transition to FRS 105. And while there are some opportunities to disclose less information, the reality is clients don't get excited about this stuff. So the opportunity here for you is minimizing the impact and making your life as simple as possible. We want to make it practical, we want to make FRS 105 simplified, and we want to make FRS 105 be more efficient. The biggest thing for accountants with FRS 105 is to do this right, get it right, without costing an arm and a leg in terms of time. And that is what we are here to help you do. So, let's take a look at FRS 105. But before we do, I want you to download our FRS 105 quick guide and our FRS 105 template financial statements. So I want to take a look practically at these documents over the next few minutes. So let's open up, first of all, let's open up the quick guide. So what the quick guide does is it brings you through, first of all, an overview like we've already looked at in terms of when FRS 105 comes into play and who can apply FRS 105. Now on screen here, have a look. So to avail of the micro companies regime, you are an entity that has a turnover of 700,000, balance sheet of 350, 10 employees, less than those thresholds, meeting 2 out of 3 of those criteria. Yes, FRS 105 is for the smaller companies. But just because it's for the smaller companies, don't discount it and don't dismiss it as an option and as an opportunity. The beautiful simplicity of the financial reporting of FRS 105, as I will show you in a couple of minutes, for those smaller clients, it's definitely something that is of value to them. So, it's not just about size criteria though. Even when you meet the size criteria, there's a whole slew of exclusions. So the biggest exclusion for you to watch out for is companies, although small, if they are Schedule 5 companies, in other words, authorised investment firms, insurance intermediaries, or any other company carrying on a business by which is required to be authorised by the central bank, any company that's authorised by the central bank is a Schedule 5 company, and they cannot apply FRS 105. Now, also excluded, credit institutions, securities regulated on a regulated market. But watch this one here. A holding company of a small group, even where the small group meets the small group thresholds, if any company within the group is a Schedule 5. What are we talking about here? Well, what we're talking about here is, let's say we have a little group over here, and let's say that group meets the small group size criteria, the 12 million turnover, 6 million balance sheet and 50 employees. On that basis, it doesn't need to consolidate. On that basis, the individual entities within here have a choice of whether they apply Section 1A or FRS 105. Now watch this. Let's say this entity here is a Schedule 5 company. So it could be a Schedule 5 company, and on that basis, it cannot apply FRS 105, so it must apply full FRS 102. But that's not the end of the impact. Its parent up here, what point 4 is saying is, the parent up here, this may be a dormant holding company. And on that basis, it would have the option to produce accounts under FRS 105 or under Section 1A of FRS 102. But because this subsidiary here is an FRS 102 company, this company up here must produce full FRS 102 accounts. And in producing full FRS 102 accounts, they would need to be consolidated financial statements, even if the group is small. They talk about exclusions here for investment undertakings, financial holding companies. Now watch that. Watch that, there's confusion here. This is not a holding company in a group can apply FRS 105. There's specific definitions of what an investment undertaking is and what a financial holding company undertaking is that you should be familiar with in applying FRS 105. Watch this one. So, a subsidiary that is included in the consolidated financial statements of a parent for a year. Let's go back up here to our little group, right? Let's rule out this here. Okay, so let's forget about that being an FRS 105 company. If we had a situation now, okay, so let's say we have a situation here where this company here is a Section 1A. This company here is a Section 1A. This company here is a micro. And let's say the parent up here is a micro, because there's no trade, the whole thing is a small group. Right, if we end up in a situation where this is not a small group, if it's not a small group, so now this company up here must produce accounts under FRS 102, and while these entities here can continue to produce accounts under Section 1A, this company down here, it cannot produce micro accounts. It must either adopt Section 1A or full FRS 102. So the bottom line here is you can't have a micro company in a group. Now watch this as well, point 10 here. Charities specifically prohibited by FRS 105 itself from producing micro entity accounts. So, in our quick guide, we go on to give you the key points. And the key points in here on page 2 of our quick guide, we've really summarized the key points of FRS 105 for you. At a very basic level, these are the core accounting policies. So assets are not permitted to be carried at fair value or revalued amounts. Everything must be done on a historic cost basis. Development expenditure, there's no option here for development expenditure. It must be expensed. Investment properties, they must be held at cost and depreciated. So there's no such thing as investment properties like we would have had under FRSI, SSAP 19 and section 16 of FRS 102. All assets here must be depreciated. There's no deferred tax. So anything that you would have had, at this stage you see all Irish companies would have had to go to full FRS 102 and are now coming back to FRS 105. This is actually a deterrent for some firms. Some firms are saying to me, well, Ted, I'm now going to have to do another transition. You see, when you go from FRS 102 to Section 1A of FRS 102, there's no actual transition. It's an option within the framework. But when you go from FRS 102 to FRS 105, there is a transition. And some of those transition adjustments are where you have investment properties. Some of those transition adjustments are where you've deferred tax and you now need to reverse it. Some of those transition adjustments are where you have revalued properties. Here's the policies of FRS 105 in a nutshell. What we've then done is we've gone in here into FRS 105, we've gone into Companies Accounting Act 2017, and we've looked at what does company law say about this, and how does financial reporting and company law, how do they dovetail and tie in? So we've given you a very condensed checklist here of what the maximum disclosures are under FRS 105. What your profit and loss account looks like, what your balance sheet looks like, what notes need to go in to the... Now we're going to look here, we're going to look at a sample set of financial statements in a minute, so we will see all this stuff in real life. But what I want to do here is I want to give it to you both ways. I want to give it to you, well, here's the theory, and here's the requirements, and then I want to give it to you, well, here's the financial statements. So I'm giving it to you in both ways so that you can consume it whatever way works best for you. Our FRS 105 quick guide here, I'm not going to tell you that with this FRS 105 quick guide that you can dispense with the requirement to read and understand FRS 105. That's not the case. FRS 105 is 120 odd pages. But what we've done here in 10 pages is we have summarized the differences between old GAAP, FRS 102 and FRS 105, and we have condensed it down into a nutshell to make it as simple and as concise and as straightforward as possible. Now, here's one of the misconceptions. I'm not going to go through every line of this guide. It is extremely, it's laid out, it's self-explanatory, it's clear, it's concise. So you will need to read that in your own time. Here's one of the misconceptions though. One of the misconceptions is, oh well, FRS 105, it's a really simple, straightforward standard. There's no transition, okay? You're right, it is a really simple, straightforward standard. There is no transition disclosures. However, when you are moving from FRS 102 to FRS 105, you do need to go through a transition process. You don't need to disclose it in your financial statements. Now, for the vast majority of micro companies, remember these are only smaller companies, there will be no transition adjustments. But some of the key areas where there are transition adjustments, the likes of investment properties, the likes of where you've got previously revalued properties, the likes of where you've got investments valued at fair value. Because there's no fair value accounting, there's no deferred tax. So watch it. It is a beautifully simple standard. But you may have transition adjustments when you come back from FRS 102 for the first time. So keep that in mind. This quick guide here should clarify for you what those differences are and how to deal with them and how to tackle them. Okay, that's our quick guide. Now let's go look at the second document that I have for you for free in this video workshop, which is a sample set of FRS 105 accounts. Now, I've done this as an audited set of financial statements. The only difference between an audited FRS 105 set of accounts and an unaudited one is obviously the format of the accountant's report versus the format of the audit report. I just want to show you one thing in the audit report that's a little bit different than what you're currently doing, and hence why I've picked an audited financial statements. the beauty of these FRS 105 companies, they're micro companies. They're not going to have audits necessarily. They should be audit exempt. Oh, sorry, we live in Ireland, so audit exemption and the whole late filing, that's an issue. Yes, unfortunately, we are going to end up with some FRS 105 companies ridiculously being needed to be audited. The vast majority of them won't need to do so. Okay, but let's take a look at the financial statements. So the financial statements, so first of all here we have our size criteria defined, 700,000, 350, 10 employees, 2 out of the 3 criteria. We've identified here the types of entities that can't avail of FRS 105. Okay, so FRS 105. Now I've flagged here that companies can include additional notes on top of the minimum, but where this option is availed of, you must comply with the requirements of Section 1A of FRS 102. Because you see, one of the things that comes up for people here is, when we produce these FRS 105 accounts, they're very simple accounts. What if my client wants more information? Well, let's just take a look here at what is included in the accounts, okay? So what's included in the accounts? We have our directors and other information. The first thing that's gone out of the accounts is director's report. There is no requirement to put a director's report in a set of FRS 105 financial statements. So then we have the audit report, the profit and loss account, the balance sheet, and notes to the financial statements. Now, we've put in every possible note to the financial statements that would happen in an FRS 105 set of accounts. That's not going to happen to you. In reality, as you know at this stage, there's probably only going to be 2 or 3 notes that are going to be required in most set of financial statements. Okay, I want to deal with one of the challenges to FRS 105 from the very outset. Accountants are saying to me, oh well, I'm giving these accounts to my client and there's very little in them. There's not much detail. And how will I justify my fee to my client? I would say that's a pricing conversation. That's a client customer care conversation. If your client chooses to have more complex financial statements, well, by all means, give them a choice and charge them appropriately. But the reality here is your client shouldn't be paying you based on how many notes are in the accounts. There's the same amount of work is done to do an FRS 105 set of accounts as to do a Section 1A set of accounts. You still have to go through and do all the reconciliations, do all the control accounts, create the trial balance, create the file. So it's the same amount of work from an accountant's perspective. We need to have that conversation with the clients. By all means, if the clients want more information in the accounts, but don't use, well, the client is not getting as much in their hand as a justification. Now, to get around that, the client is not getting as much in their hand as a justification, I've already given you one solution. The first solution is, well, you can upgrade your disclosures and put in the same detail as if it was a Section 1A FRS 102 set of accounts. Personally, from my perspective, that kind of defeats the purpose a little bit. The second option that I would suggest, and this is my favourite option, is you produce your statutory FRS 105 accounts, and if the client wants more information, do you know that additional information schedule? So additional schedule information that does not form part of the statutory accounts, put additional notes and information in the supporting notes and schedules. But like the client, most of your clients, they don't know and they don't care. Okay, some of them do. But have a conversation with them. This is a little bit like audit exemption. I heard this going on back in the mid-2000s when audit exemption was becoming more popular. Oh, if I avail of the audit exemption, how will I ever justify my fee to my company clients? That's not the way to go. Explain to them, give them the choice. I'm not suggesting a reduction in fees here for people who move to FRS 105 accounts, but if an FRS 105 micro entity does not want to avail of the financial reporting framework that's open to them and they want to go for a more advanced one, well, maybe that's an increase in fees. Let's have a look here. So, no director's report. We have our audit opinion here. So this is the new format of audit opinion under the new IASA auditing standards. So this is under the new IASA auditing standards due for periods 30th of June 2017 onwards. So the basic format of the opinion is the same. We've got our opinion, we've got our basis for opinion, we've got conclusions relating to going concern. We have our other information paragraph, opinions on matters prescribed by the Companies Act, matters on which we're required to report by exception, responsibilities of directors, responsibilities of the auditors. This bit here is different. If you are auditing an FRS 105 company, this bit here is different. The Companies Accounting Act 2017 inserted an additional section to update section 336, which deals with the auditor's requirement to form an opinion in relation to the opinions giving a true and fair view. So watch this additional wording in your FRS 105 accounts if you are doing an audit on them. Here's our profit and loss account. The profit and loss account comes from a prescribed format. Companies Accounting Act 17, in a context of FRS 105, inserted additional schedules. It inserted Schedule 3A, which was for Section 1A FRS 102 companies, and Schedule 3B, which was for micro entities. The format of your profit and loss account, as laid out here in front of you, is prescribed in there. You cannot change this format. You can add additional subheadings if you wish. We have the profit and loss reserves movement on the face of the P&L account. Now, because in the abridged accounts of FRS 105 financial statements, this needs to go as a note to the abridged account submitted to the CRO. What we believe most people will do here is they will not disclose this here. They will put it in as a note to the financial statements. They will be not submitting the profit and loss account to the CRO. So they'll put this in as a note to the financial statements, and that's how they will comply with that statutory requirement. Our balance sheet, again, a prescribed format. Okay. Here is where one of the problems and confusions arise in relation to FRS 105, a uniquely Irish scenario. Look at the bottom of your balance sheet. The bottom of your balance sheet, do you see here? These financial statements have been prepared in accordance with FRS 105. So the directors need to make that statement at the footer of the balance sheet. Now, what FRS 105 actually tells us is FRS 105 says that the notes to the financial statements do not go in as notes. They need to go in here as a footer to the balance sheet. So that's what FRS 105 says. That's what UK entities do. They put in their notes as a footer, but then Irish company law didn't update it, so the CRO are now saying, and of course they're not saying it consistently because they're only saying it certain times, but the CRO are basically saying, well, actually, you cannot put the notes in as a footer to the balance sheet. Irish company law doesn't prescribe it. We don't care what FRS 105 says. When you're submitting abridged accounts to us, you need to have this sign-off required by company law, and then chances are micro companies, they're availing of the audit exemption. You need to have your audit exemption sign off, and the balance sheet needs to be signed off like an abridged set of accounts, and then you put in your notes separately. Notes to the financial statements. In the UK, you see, FRS 105 does not require that you put in accounting policies. For some bizarre reason, we have decided you need to include accounting policies. Including accounting policies here is totally redundant. And the reason why it's totally redundant is there is no policy choices under FRS 105. When you're producing financial statements under this simplified financial reporting framework, basically the choices are taken out of it. You've got to put in your accounting policies. That is going to be the first note to the financial statements. The second note to the financial statements, this is where directors' benefits, advances, loans, credits, or guarantees. This is not all your transactions. These are only the transactions to the benefit of the directors. So this is your debit directors' loans, not your credit ones. Technically, under company law, these shouldn't be arising anyway, because they're illegal under Section 239. But there you are. Note 2, only if they're debit. You've got to disclose guarantees, contingencies, and other financial commitments. These are only guarantees, other contingencies, and other financial commitments to the extent that they are not included in the balance sheet of the company. So the vast majority of small companies won't have much stuff here. We need to have a note. If you've got goodwill, we've got to put in the amortization note. If there was a prior year adjustment, you've got to put in that note. If there's impairment to assets, you've got to put in that note. The holding of own shares, if it arises. But how many companies do you know are micro companies that are holding their own shares? So there's disclosure requirements here. I'm giving you them all. But most small companies, they'll have their accounting policy note and maybe one other note. Everybody has to put in this note here in terms of the movements on the profit and loss reserves, because this note, it must go into the abridged accounts. So logically, the best place to put this is put it as a note in our statutory accounts and then call it up in the abridged accounts. So the reality here is probably 2 or 3 required notes in your FRS 105. The other question is the bank. Oh, well, the bank want more information. Again, this is like the audit exemption where I've heard over the years, oh, the bank won't accept audit exempt accounts. It's new, it'll take time. Explain to the bank, this is the FRS 105 framework. Do you want some additional information? Okay, either get your software provider to allow you call up notes, additional information outside of the statutory accounts, or give the bank the additional schedules. You see, like there is differences between FRS 105 and FRS 102. So on the one hand, there is a bit of work in this, but on the other hand, if you know where to look, you can keep this fairly simple. And that's like our whole focus. We get up every morning to try and make life easier and better for accountants. And our whole focus in creating and designing this resource center that all this stuff is contained in is to simplify FRS 102. We call it FRS102.com. And it's for accountants who are busy people. Like, we've invested hundreds of hours reading the standards, digesting the standards, simplifying the standards, creating examples, sample template financial statements, so that you don't have to. Like, well, to be honest, at this stage, we're counting our time investment in this product as thousands of hours. But FRS102.com, it's about giving you peace of mind and giving you the resources that you need to have at your disposal to keep you at the top of your game. Now, at the start of this session, I talked about accountants and getting down to nitty-gritty in terms of what's different and where mistakes are made. And based on our interaction with accountants, we know where the problems are and the key sections of FRS 102 and the differences and changes that we need to watch out for. So I'm planning on doing our 3rd workshop in this series based on your feedback in the key areas of FRS 102 that are causing those problems. So keep an eye out for that workshop. We will be covering the 4 or 5 things that you really need to know. So I'd love to hear your thoughts, your comments, your concerns in relation to the implementation of FRS 102 and FRS 105. How are things going for you, and what are the key challenges you're now facing in relation to financial reporting? And we can include that in our video. So drop a comment below, and for today, wishing you all the best. So remember, whether it's technical issues or what issues you have with your firm, OmniPro are here for you, and if we can be of any service to you or your practice. So talk soon, bye for now, and until I see you again, let's get it done.